following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' tune means it's time once again for the old Option Block, and I can't even get into show. I'm too busy dancing over here to that
rock and roll,
to that rockin' tune, and I'll let that image linger in your minds for a little bit. My name, of course, is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network, and I am joined today on this post-holiday kind of taking it easy in the market and in life show by an abbreviated panel of one. Luckily, he is a panel unto himself. None other than Mr. John Grigus, holding down the hot seat over at Options Express. Mr. Grigus, welcome back to the program, sir.
Yeah, good to be here. Yeah, I heard Sebastian may have blown off a few index fingers while celebrating the 4th of July last week, so he might still be in ICU.
I told him not to do the old mouth trick with the M80. I don't know if I guess he didn't listen to me. I don't know.
No. That's going to be dangerous, especially as you've been drinking all day and are fairly dehydrated in the 105-degree weather we had on 4th of July here in Chicago. It was hot.
Uh-oh. Actually, I may be inaccurate in my head count. Do I hear the pinching claw noises of one Mr. Rock Lobster from Maine joining us on the old panel today? Is that you, Mr. Lobster?
The lobster's here. I was here. I just didn't get the bing or the ding or whatever. I don't know. The Skype gods were telling me you were offline, so I don't know. Perhaps Skype was not favoring you today. Who knows? After this, ever since Microsoft spent $8 billion on Skype, it really seems to be going downhill. Just one feature after another and not working. Kind of funny. Oh, that was a ding.
There we go. Apparently, Skype belatedly letting you know that you can join the show now. So, Andrew, it was 1,001 degrees here for 4th of July in Chicago. How were things in the land of Maine?
The land of Maine was sublime and perfect. It was about 75 to 80 degrees. There's a little breeze. Actually, my family went to the beach this morning. They said it was chilly.
Wow.
The breeze coming off the water. They're like, oh, it was only like 75. I mean, and they're like, but it was just like there was a little breeze. There was like, they were cold.
Must be nice. It's just when it's too chilly to go in the water in July.
My family is ridiculously beach spoiled in Maine in the summertime. They're
So I
like
guess
the Princess and the Pea, unless it's perfect, they can't go.
I take it then that the water isn't boiling so much so that the lobsters are just crawling up onto the beach to offer themselves to you because it's so hot up there. I envision that in my head.
They were hopping out of the water cooked like they are doing in Chicago right.
They pop out of the water fully cooked, they spritz themselves with lemon, and then they crawl into the boat, and all things are good in the land of Maine.
Right. Although it is warm enough for like the ponds and stuff around here to definitely you could do some twilight swimming no problem, and
It was warm enough yesterday to swim in some of the deeper coves with, no trouble whatsoever. So we hit many bodies of water yesterday in the main coastal area.
So twilight swimming, is that where you swim with a bunch of sparkly tween vampires? Is that how that works?
Something like that. Well, mostly you just put your kids in little floaties, and you swim it at night in the dark, and they try to catch fireflies.
These aren't ponds that you're going swimming in, are they?
Well, they're kind of lakes.
Okay.
So we tried what we call the triathlon here: pool, lake, ocean.
Ocean.
That's
nice.
what we try to achieve in one day: the pool, lake, ocean trifecta. And then my kids fall asleep like they're dead at around 8 or 5.
I prefer my bodies of water saturated with chlorine and hopefully free of large carnivorous beasts. So I tend to lean towards the pool side of that equation, but that's just me.
Yeah, I know. We were definitely one of our little swimming rocks. We were fighting it out with a couple of horseshoe crabs, trying to mate. I don't know if that's option insider information. Or
yes,
not.
we may have segued into the dark realm of horseshoe crab mating rituals. That should be the new show on the Options Insider Radio Network: horseshoe crabs and their mating rituals. You can tell listeners
you can do it too.
You can tell it's a slow post-holiday week. But with that imagery of horseshoe crabs post-coitus, we shall dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, where we break down the day's worth of action. And even though I joked about it being a quiet holiday week, we did have some action on the street today. The market started off down fairly a decent amount, about 0.5 percentage point across the board. Enough to jolt you out of your bed in the morning and kind of wake you up like a brisk shot of coffee. We did, like we have been in most other recent days, we ended the day kind of easing up on the sell-off a bit. Most of the major indices down about 0.2 of a point on the day, with the VIX cash getting the holiday back and then some, up about 0.88 to close at 17.98 on the day, or up about 5.2% on the day. And let's start there, Andrew. A lot of VIX lovers flocking back in. Is this people who took the weekend out early, just putting it back in? What was going on out here in VIX today?
Yeah, I think mostly around the weekend is usually worth about 70 cents. So I think so. And just the VIX move on all day was underwhelming, I think. And VXX, our favorite ETN, we love to hate, love it, was down 11 cents. So the futures compressed. I think everything was just, nobody was coming to buy anything, although the actual VIX volatility was up just a little bit, up a couple of points.
I love it. What am I missing in the whole narrative here, where everyone and their mother races to take the holiday out on Thursday last week, and they can't sell enough of this stuff going into the weekend. Then on Monday morning, we're down a wee bit, and all of a sudden they have to put it all back in and then some again. It's this strange schizophrenic beast known as the VIX market maker.
But that's what they do,
What about Friday? Friday the market was down. Friday the market was down huge, and the VIX wasn't even moving. It's like there were no players there at all.
They were actually, as the market was going, they were just taking the vol out. They just didn't care. Nobody is, I'll tell you, with this European thing, whatever they've decided to do, even though it's going to take years for them to fix it, they're not. It's not to the go-go I would say we had in March, when everybody thought we were actually creating jobs instead of just the government, taxing us more, and they took the money and they bought jobs with it. In those happy times, now it's it's kind of a muted picture. Not seeing 1250 in the SPX maybe as much as everybody thought, but we're not seeing much of an upside either. So all those things are conspiring to just to press on the indexes, even though the underlying index volatility is actually moving around a little bit. I mean, today it was a little flat, but for the last couple of weeks, it's been moving. It's been moving at a fairly good clip every day. So I think all those things are kind of, it's all sort of just coming in just slightly. And that's what we're sitting here watching. So
it's funny. This reminds me kind of my early days on the floor of the SIBO when I first walked into the SPX, and you're trying to, as a young trader, getting a handle on all the different levels and why front month is bid a half under, and and maybe second and third month out are half over bid, and all the different upside strikes are offered. This is bid, and you're trying to get a feel for what paper is doing and why these different levels are the way they are. And you think in your heart of hearts there has to be some intuitive logic, some sense behind the whole thing. It's not just some mad cacophony that comes together at some random point. And yet the more time you spend with it and the more you start looking at what's actually going on in the marketplace versus what paper is actually doing and why these things are bid and offered the way they are, you start to kind of just go with the flow and say, okay, this is half under offer. Okay, that's fine. You start to just learn to go with it as opposed to looking for the rhyme nor reason behind it. I kind of view VIX and VIX options and the VIX cash in kind of the same way. You have the mad race to sell premium early last week, post-holiday, though, which makes no sense. And then now racing to put it back in the other way. It's kind of one of these things you kind of have to just shrug your shoulders and say, okay, therefore, there goes the VIX. I'll just go along with it and trade accordingly. Whereas people actually trying to put mental capital into figuring out these levels and what's behind them, I think it oft times is a fool's errand.
You can spend a lot of time doing it.
Perhaps I'm just a jaded old floor trader, and that's a hopelessly antiquated point of view. But that's just kind of the way I view it now. I've had all hope and opportunity bred out of me, Andrew, beaten out of me, I should say, over the years. Replaced by a deep, deep, deep cynicism.
Right. Well, that time does that to you. What are you going to do? But I think we're just the expectation they might be messing around with things a lot, But I think the index has still been moving around fairly well. I don't know. It's getting more well priced. I think things were a little cheap last week before, and I think things are getting more well priced now. They're adjusting a little bit. That leading to the more interesting stuff. I'm actually just finishing a blog for us tonight. Is just what's going on in the ags. I know the Option Express boys will give us a little taste of that, but there's a little nuttiness going on over there.
Yeah, I took my annual ride out to the border of Iowa and Illinois, and man, got a view of a lot of corn.
The annual Grigus crop report. What did you see in your annual, or should I say semi-annual trek?
Yeah, we do the Starve Rock, let's go hiking, and obviously we couldn't do it when it's 102 degrees out because my wife wants me to come home with both kids. She's such a nagger. But this year we brought her along, and the crop around me is pretty good. I live out in the boondocks, the southwest suburbs of Chicago, and out there, I don't know if cross-pollination and hybrid technology in the agriculture scene has done something where these crops no longer need water, or the amount of rain that we've gotten this year is sufficient. But the further that we headed west and got to the Iowa border, it kept getting worse and worse. You could see it. I'll talk a little bit about it more during the segment of the Express Block, but had a chance to talk to some farmers out there as well as ones that traded Options Express, and they were pretty good insight onto what the move has been like for the last 2.5, 3 weeks, and what their crops look like personally. So it's not good.
Andrew, I don't know if you know this, but every year Aunt John takes this almost religious pilgrimage out to the corn crop, and we get his firsthand insight into the corn crop, and it usually is relatively astute. Then he goes on to make a small fortune slinging his ag futures around like a madman. But yes, it's interesting stuff. Whenever July 4th rolls around, we get our insight into the corn crop. I'd imagine, given these temperatures we've been seeing in 80+ degree temperatures even back in March around this area, that has to have had some impact on what's been growing out there. Andrew, what were you watching? What are you writing up in the ag land these days?
I was looking at this product, corn, CORN. I try to stick with anything that you take a future and you anything where you take a future and you convert it to some kind of equity and then it becomes some strange equity to trade, then I write about it. I got to be careful what I feel qualified to actually talk about. I like basically stuff I actually trade. So this product looking interesting. It's a relatively new one for me. But this fund seems to follow corn futures fairly well, and there's some volume is picking up in it. So it's an interesting product, but it's, to me, I see, like, when I see something just rocketing up with the implied volatility rocketing up, that generally we're getting a little ahead of ourselves. Don't know when it's going to come crashing, so that's the kind of thing I normally sort of back spread, or any kind of ratio spread, because there's such crazy underlying movement. You just don't know what's going to happen. I mean, and so this is kind of this product feels like it's sort of in a place that it's never been before. So that's when things kind of get more interesting for me to trade. So that's how I see that. As the rest of corn makes some pretty. I think it was almost up limit up today at some point. So
Yo yeah, corn's looking crazy right now, man.
Listeners may recognize the tinny voice of one Mark Sebastian. It's been a while, sir. Welcome back to the All-Star panel.
Yeah, well, I'm on vacation, but I knew it had been a while, so I wanted to make sure I made an appearance. I don't want to neglect the most important option podcast in the world.
Of course.
The Option Block.
Let me guess, you're on vacation in scenic Detroit.
Well, I'm not in Detroit. I'm actually in Grand Junction, Michigan, which is about 30 minutes east of South Haven. So
this must be this week post. Apparently, I didn't know that. I didn't get the memo. But the week post July 4th is the week that everyone on the planet is on vacation. Everyone I seem to know in the area or around, they're all gone to parts unknown for this week. It's like apparently the whole Earth is out of town except for me and apparently Andrew and John.
This is a great week to cut out. I mean, if you were gonna miss anything and you don't trade commodities actively, there's really not a lot to catch. I mean, Alcoa, la-di-da, it's Alcoa, right?
It's the kickoff name.
It's the kickoff, but it's kind of less and less important, right? So...
Yeah, the American manufacturing scene is certainly, particularly in the raw metals, is not exactly the core of our economy these days.
No, not anymore. Although it's definitely indicative of what's going on in China, I suppose. So there is that.
Unless you want to count that new Google Q thing that they're making in America. There you go. Manufacturing is back in America. We can put together high-end, weird, oblong speaker amplifiers. That's about what we can do here.
There you go.
That Chobani yogurt. I like that thing, too. The guy that bought the old yogurt plant and made Chobani yogurt. The manufacturing is. And that Tesla car.
Well, Mark, we just finished. Actually, speaking before you get off the Tesla, you just mentioned it. I was at a mall this weekend out in the suburbs of Chicago. There is a Tesla store in the mall in Yorktown.
Oak Brook, right?
Yeah. I couldn't believe it. There's a store in the mall for high-end electric automobiles. It was fantastic. I loved it. So there we go. We do make something in America, apparently. We sell it in malls, like everything else in America.
Yeah, well, Teslas are really cool. Not the current ones. I mean, if you're buying an electric Tesla, what you're paying an extra $80,000 for a Lotus. But if
the new ones
are going to be really neat. The new ones are going to be really cool.
I know John and I have used to talk quite a bit on the show in the past about a lot of great trades, trading downside puts in Tesla. I haven't traded it actively in quite a while, though. What about you, John? Are you still the long-term bear here on Tesla?
Well, I haven't traded in a while either, but we do see a lot of Fiskars around downtown Chicago, and those things, I don't know, compared to the Tesla, it looks like a Ferrari next to a Ford. I mean, those Fiskars are some sharp cars.
Mm-hmm.
What does a Fisker go for?
I've seen one or two.
85 to 105, something like that.
So it's about in the same price range then as a Tesla then.
Yeah.
Okay, interesting. Maybe another reason to get some puts on in good old TSLA. But yeah, we were talking, Mark, we just finished up wrapping up on the VIX and how everyone puts the weekend back and takes it out and just how willy-nilly this crowd is, just talking about corn, and then we're just diving into some of the other interesting topics. I know, Andrew, you and I have talked quite a bit in the past about, I know you love the video game sector with Zynga, your synthetic Facebook, and Take-Two and all the other ones you're looking at. I know we've talked quite a bit in the past about ATVI, Activision on the show as being one of my favorite long-term, old-school risk reversal candidates. So they just came out last week with news that they're in play. They're being shopped by their parent company. So there's a lot of juicy, fun stuff to look at in Activision right now, trading ironically right around 12 even, which is a great level for Activision. There's bullish risk reversals all the live long day, all the way out to November. You can put on for credits or no money out if you want to put on a nice bullish spec in Activision. You watch this one at all, Andrew? I know you love you some Zynga, but could you ever dive away from that one to some other ones?
Zynga is officially my Widowmaker now. I don't like that stock. I used to like it. I don't like it.
No longer the synthetic Facebook for Andrew?
Oh, yeah, it was the synthetic Facebook, all right, all the way exactly down into the toilet.
Oh, so you had your synthetic 45 print in Facebook?
No, I'm having more fun just trading the Facebook, actually, because it moves. Zynga just is, they've really, for a while anyway, they're dead. I'm sure I'll pop back into it as soon as it heats up a little bit, but for now, it just feels like dead money for short term. But no, the Activision looks, I like these little stocks, mostly because they don't have a lot of downside in them, so... Yeah, that doesn't look too bad, like the Nove 13 of 11.
The Nove 11, 13. You can do near term, you can roll out. Activision has been in this range for a long time. I've been trading 11 to 13 for seems like a couple of years now, and now that they have this extra bit of juice coming out on them, it just gives them a little bit more pop. And you've got. I mean, I know you guys love what were you saying the other day? Never pay for a risk reversal. This is no outlay risk reversals up the wazoo here all day long, sir.
Exactly. Don't spend the money.
So, Mark, I know you're on vacation. Anything else catching your eye in today's activity?
Yeah, well, I assume that you guys talked. The VIX futures were actually down today, and I think that's more indicative of what's going on. There, despite kind of an earnings season, I think it's pretty well baked in, and there are not a lot of great reasons to expect a lot of volatility in the near term, seeing a lot of Europe. So, kind of an interesting thing to kind of be on top of is, VIX pretty flat on the day. VIX futures actually sold off. So, I think we're going to see a lot more of these little to nothing kind of days. So, that'd be my thoughts.
We were talking about just the odd performance in VIX over the past week or so, where everyone and their mother was racing to take the post-holiday weekend out the second the holiday was over on Wednesday night into Thursday, and now they're racing to put some of it, not a lot, because obviously you said the futures are still down, but some of it back in on Monday. It's just this weird schizophrenic dance they have going on right now.
The one thing you've got to think about, I kind of think about holiday pricing as kind of, it's like almost like an accounting move. The futures will tell you really where is vol going. And that's why I think they're a much better gauge of what's actually happening in volatility.
Anything else catch your eye? Mr. Grigus, what are you watching out there today, aside from the corn?
More commodities. I mean, the equity markets have been slow for us. Our futures and commodities trading has been really the only bright spot in this low vol environment. People trading crude, dollar index, crude bounced hard, had its third biggest move. Was it last week? And we're seeing a lot of people continue to pile into the grains. We have a lot of day trading margin for some of these products. We removed it from the grains about a week and a half ago. But, if people aren't seeing the volatility and seeing the movement that they need to trade equities, we got a lot of people trading grains, crude oil, energies, and anything else that floats their boat.
People looking farther and farther afield. Maybe they're all following you and taking the semi-annual pilgrimage out to the border to check out the grain crop for themselves.
It helps. I'm telling you.
Feel the corn in your hand before you trade the futures.
Yeah, hedge your grocery list by buying corn futures and wheat futures. And I don't know. It seems like we had a move of 30 to 40%, but that doesn't mean it's over. I have a lot of people saying, "Oh, this is."
I'll tell you. I'm hearing. And, I've been driving around. I'm hearing that corn is toast, and it has a lot higher to go. We're looking at, corn is going to eclipse its peak from QE2. I think. So that's how bad the crop is, despite the fact that they planted a ton of it. I think that corn has to go a lot higher.
I heard a disturbing stat the other day that about 70% of the items you buy in your average grocery store contain corn in some way, shape, or form. So that gives you an idea of just how important corn is to our global economy and our food supply these days. It's our national oil, aside from oil itself, obviously.
Yeah,
it's the homegrown oil, I suppose you can call it, that we eat.
Yeah, it's gonna go higher tomorrow. So there's gonna be pressure on this thing for some time.
I know before we get off the corn tip really quick, I know over the past year I saw a ton of locals, guys I know who are still day-to-day market making flooding into corn, and I've seen a bit of an exodus out the other way over the past few months. It seems likely as so many guys did that, it became almost predominantly local-to-local trading, and anyone who's ever traded on the floor knows that's not exactly the best way to make money long-term. So they're starting to flock back into the equities. I know some guys going into Apple and whatnot now. So it seems like perhaps the great corn rush, at least for the time being, has ebbed a little bit.
I don't know about that. Take a look at a chart of corn and you tell me that trading's not good.
Yeah, I know. That surprised me, too, because I assumed there would be more and more guys flocking out to it. But maybe when you get into the heart of it, things are getting a little bit, I don't know, too tight to make money, I suppose. If you're trading all local to local, that's not ideal. But if they're still wide, then you think you could trade out there pretty well.
How active were the E-minis today? Corn.
For some reason, I'm not...
There might be, if corn gets active enough in the near term, you might have guys scalping the mini versus the regular as well. Pretty decent volume, guys. Pretty decent. So the minis traded, the minis traded, a few thousand contracts. And the bigs traded
80,000.
Yeah, huge. 180,000 in D's. 80,000 in SEP, 30,000 in March. So there's some real volume there now. I wonder, and what was the open outcry?
How do you pull that information these days?
Yeah, no, I'm just on the CME site. Yeah, they don't have the volume for some reason on the CME site. But I'll bet you there's a scalp between the open outcry and the mini right now. Anyway, that's getting too into the weeds. So
we can parse that for another show as we dive into some of the corn and of course the S&P mini numbers going forward. But that's going to do it right now for the old trading block, and now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, that funky tune means it's time once again for the old Odd Block. And we're going to pick things up where we left off last week on Monday's show when we talked quite a bit about this very sizable and unusual spread that went up in XLB. It was a put spread in September. It went up almost 100,000 times. At the time, we were kind of parsing it because it all went up mid-market, and it was kind of hard to read the tea leaves on that one, at least in the brief time we had allotted on the old show. Well, since then, we had some people write into us with some interesting analysis, including our friends over at Trade Alert. Gotta love Henry at the gang, and they parsed it a little bit more for us. And what turns out is, of course, if you listened to the show last week, we were talking about the SEP 25-29 put spread went up about 100,000 times. Of course, XLB closing today a little bit south of 35, doing only 14,000 contracts, so a quiet day in XLB. But that put spread that went up back on the 2nd was sold. Andrew, you and I were debating a little bit whether it was sold or open. I think I was leaning towards the sold side of the equation. But it was sold about 83,000 times for a whopping 13 cents. And if you look back at the open interest, this trade was actually put on way back in May in two big chunks on the 16th and the 17th for about 45,000 lots apiece at the time, when it was put on for about 56 cents. So if you do a little bit of math right there, you see this guy is closing out and taking a loss of 44 cents on nearly 90,000 contracts, which puts his loss nearly $4 million just on these contracts he's closing out alone. Now, of course, if you look a little deeper into the open interest, you'll see there's still about 45,000 contracts open on both strikes. So he's got either he or someone who followed closely behind him is waiting to take another hit on this rest of this XLB and close it out. But not exactly a market-beating trade here on this massive 120-odd thousand contract XLB put spread that went up back in May, and the bulk of it closed out last week with still some more to go. So there you go, Andrew. That's the secret sauce we were missing last week when we were talking about about this spread on the show last week. Someone taking What did you say on the last show? Taking some pipe, the old floor trading term, the old technical term.
Yes, my observation at the time was this guy has taken some pipe, and
that certainly is the case. We have since quantified the exact amount of pipe, and thankfully, thankfully we might have to skirt the family-friendly rating on this show for today. Well, next up we have every Canadian's favorite, which is RIMM, closing today at $7.67. And RIMM, if you've been following our show or just the markets in general, has been just on a downward spiral of late. Just bad news after bad news pouring out of RIMM. Closing today at $7.67 on some decent volume, about 90,000 contracts. They're usually doing about 82,000 a day. What we actually saw today was some flurries of optimism, at least near-term upside specs in RIMM. We saw people diving into October upside, picking up about 8,000 of the OC9s for, and a bulk of them trading in a big block of 4,000. This was pretty much, I believe, let me look really quick here. This was right on the open. As soon as the bell rang this morning, this stuff went up. So someone just right out of the gate wanting to put on some upside here in October on RIMM. Most of them went up for about 79-80 cents a piece. We also saw the... So that was the big trade in RIMM today. About 10,000 of the OC9s going up for about 80 cents. There is a shareholder meeting tomorrow for RIMM. That's going to be pleasant. I kind of wish I could check that one out just to see what those guys have to say to their loyal Canadian audience out there, because it's just I'm not sure what is the salvation for RIMM at this point, aside from selling off some patents or licensing or doing a few other things that I'm sure that audience doesn't really want to hear. All right, so RIMM, people looking for upside in RIMM. Now we're going to dive into Horizon Pharma Inc., ticker symbol HZNP, an odd block newcomer. And this one closed today at $7.61. They usually do a whopping 1,300 contracts a day. They did over 11,000 today. The bulk of them was upside call buying, where we saw it's kind of similar to RIMM, people flocking in to the Nove 7/2 today in HZNP, trading 7,000 on the day, including a block of about 5,800 for 90 cents a piece. We also saw some people looking at the near term of the AUG 7/2, picking up nearly 2,000 of those today for about 70 cents as well. So a lot of upside specs, a lot of upside trades going up here in HZNP, but they have earnings on August 30th, and they have a conference they're speaking at coming up on Thursday, so perhaps some people think something could be coming out of then. Of course, you probably wouldn't be prepping out in November for some activity on Thursday, but a lot of upside call buying today in the old odd block in Horizon Pharma and RIMM. And that's going to do it for the old odd block today, and now we're going to dive right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the show where the boys at OX hold down the old fort. And today, that is none other than Mr. John Grigus. So, Mr. Grigus, aside from your great pilgrimage to the agricultural heartland of our country, what is going on over in the land of OX, sir?
Yeah, real quickly, I'll touch on a couple of things, then we'll move away from the recent grain move, because we did talk about it in the trading block. But I have to agree with some of the points that Sebastian made earlier in the show. Overall crop plantings in the United States was the highest it's been since 1937. And normally with that type of USDA crop report, you would see some downward pressure in the prices of crop and any other grain that kind of fed off of corn. What we're seeing here is a 40% higher move since mid-June, since June 15th, in corn, and a 30% move since that same date in wheat. We've essentially almost doubled our margin requirements on all of the grain products because you're seeing limit up moves, limit down. Well, not really limit down moves. You saw a little bit of a sell-off on Friday, which looked like maybe some profit taking before maybe a wet weekend that didn't materialize. But you need to be careful in this product right now. People want to short it because they see the move and they expect it needs to go down, because if you take a look on a yearly chart, we're kind of getting to that level in corn where we've seen some resistance before. And, like anything, people want to take a shot. And, the trend is higher right now. There is no forecast for rain in the Midwest. To kind of break it down into more local, I haven't cut my lawn in 6 weeks. I know, Mark, you live in the city and don't have a lawn, but I haven't seen a drought like this in the Midwest in a long, long time.
My lawn is a 1 inch by 1 inch square piece of grass on my balcony, and I love it.
Well, add the drought plus the 105-degree heat, and you've got it's like something out of a cheaply made sci-fi movie. Like mega drought versus super not showered. I don't know. They're not all winners.
Mega drought versus super not showered.
I love
let that one sink in a little bit.
Might become a winner.
A graphic novel coming soon to stores near you. Super not showered.
So late last week, I had a long conversation with a farmer. Has been doing it his entire life, and what farmer do you talk to that isn't 70 plus years old? But he was a farmer in the southern Minnesota area, which, if you look at some of the reports as far as rain totals, that area has received more rain than central and southern Illinois, Iowa, and Indiana. And it was interesting because I expected to hear some good information as far as the height, the pollination, and the stages where the corn was at. That wasn't too bad. And he said his corn was so bad that even if he saw rain the next 2 weeks, he potentially thought it would be too late, and that the heat from last week, the week of the 4th of July, where we saw 4 days of plus 100 degrees, has substantially killed his crop, and he expected that he may lose up to 80% if have a crop at all. And he didn't have a substantially big farm, and he wasn't too worried about it, but he had talked to a lot of the farmers in his area, and I had talked to some of the farmers in Illinois and Iowa, and they're kind of saying the same thing. So it's, I wouldn't say we have a panic on our hands, but it's getting pretty scary for some of the people who depend on this for their living. And then we should all be concerned, as what Mark Longo said in the beginning of the show, is that a lot of this, of the products that we buy in the grocery store are corn-based or have some type of corn byproduct in there. So a couple of things that you want to remember if you do want to trade this, and you can see that Sebastian said September corn had 80,000 in volume, and I think Deese was about 180. You want to remember the limits and what happens when a corn or any grain product goes limit up or limit down. Limit in corn right now is 40 cents. Wheat is 60 cents. If you're short corn, it goes limit up, and there's a substantial amount of contracts trying to purchase it limit up. You're most likely not going to get filled. You can place the limit order on our site to work that limit up price. Do not place a market order. And, I've seen grain products go limit up for 3 or 4 days, and that could happen. So, here's where you want to make sure that you have a nice cushion in there to trade this product. You see the margin requirements, and ours are slightly higher than the exchanges. If you're going to, right now, I would go to 2 to 3 times that if you're going to be trading one contract, just so you have the room, to not get blown out. Actually saw a guy trading crude last week. I know we're talking about grains, but he was selling uncovered calls, and he sold it in the morning, and we blew him out about 3 hours later because of the move that oil had. And he, called up and was fairly, understandably upset and didn't understand. He goes, I just put this on 3 hours ago. And I said, hey, the market doesn't care when you put this on. It's going to do what it has to do. And, you need to have the cushion in there to stay in it. But so I'd be careful trading those grain products going out, and make sure you definitely have a thick cushion and to take on any move that may happen.
And that might be a good topic for a strategy block down the road a bit, is trading the ag futures and the ag options when the products are indeed limit up. And that's a scenario most equity option traders are not really familiar with, because it doesn't happen around earnings where you're limit up, limit down. It's just not something they encounter regularly. So a lot of these, particularly for you guys, John, these retail people coming in and diving into ag options for the first time and encountering these limit up, limit down scenarios, might be worth discussing that a little more on a future show. All right, John, I didn't mean to hijack your segment. What else you got?
We had a lot of calls too on the mini options and when we'd be rolling those out. And really the latest word is that they still have not received approval. When we talked to the exchanges back in late April, they were looking for an end of May rollout of this product. Basically, it's some of your more popular and more highly priced securities, Apple, Priceline, Google, where the deliverable is going to be 1/10 or 10 shares. The main driver of this is that so people that have 10, 20, 30, 40 shares of Apple can write covered calls against it. And I got to imagine that some people that want to trade these options but don't have the money are also going to venture into it too. And I really don't see the purpose there, but it is what it is. Every exchange has come up with a new and most popular product these days to kind of get the edge on the rest of the 9.5, 10 exchanges out there. So right now it's looking like end of August. We'll have banners and information and talking points and FAQs up on the site. But based on the delay we saw in May, we probably expect it more like September. That's about it.
Yeah, the industry getting together behind the whole mini Apple options product because everyone knows the value of those. Even the exchanges that created those products, the ISE and the NYSE, are kind of putting their swords aside just to work together to try to get something out there because they know this will be pretty much a home run once it finally launches. But thank you for that, Mr. Grigus. I think we have a few minutes now. We'll dive really quick into a quick listener mail segment.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
Welcome to the listener mail segment. This one was posted in our forum by our good friend optionsvoodoo, who loves sending in questions for the show, and he writes, Option Block, I wanted to know what you found is the best way to explain to common folk that you trade options for a living. I find it very difficult to answer the common question of what do you do for a living. Even my most successful attempts, I am always met with rather blank stares, or worse, if they have a sliver of knowledge, I think I just buy low and sell high common stock, which I think most option traders find unsophisticatedly insulting. Please help me with your infinite wisdom, optionsvoodoo. And I can kind of commiserate here. I know when I was on the floor and I first started doing that, I used to hate it when people called me a stockbroker. The people just couldn't wrap your head around, I hear you're a stockbroker now.
So you're the one that makes the price, or you're the one that does that.
Yeah.
That's the other thing.
Good luck explaining the job of options market maker to anyone, even people who are not familiar at all with the markets, let alone people who have any savvy. They know mutual funds, they know stocks. So, optionsvoodoo, I think we all here feel your pain. This is a good time to bring this question up. Everyone here on the show, pretty much former floor traders in some way, shape, or form. And I think we've all pretty much felt that pain of being called a stockbroker or being called a stock trader in some way, shape, or form. So you have to get them over the hurdle of options first. Then you have to get into the whole market making and trading thing. It's a long, long road. I eventually gave up optionsvoodoo. I just said, I trade for a living, or I trade options. And that was pretty much about it. And then if I got the blank stares, I was accustomed to it. I don't know if you guys have any more perhaps salient truths you can offer him on how to get around this, but I kind of just gave up. I washed my hands of it.
No, I got nothing.
Andrew is the man who traded every product from the P-Coast to the Amex. Have you found a way to circumvent this in your days?
Yeah, actually, some people actually sold drugs. Because I was always done at work by like 1:30, and somehow I seemed to make money. They're like, that's not a real job. You must sell drugs. I'm like, no. I sell options.
You sell drugs. You didn't tell them you were going to work at like 5:30 in the freaking morning out on the Pico.
No,
that was the other side of that coin.
Exactly. Drug dealers definitely do not do that unless they're highly motivated, obviously.
That's an aggressive H dealer if you're out there at 5:30 in the morning.
I just say you provide liquidity. That will really turn people.
That'll do it. Yes.
Stand on their head.
That will end the conversation in a hurry if you do that.
Exactly. I provide liquidity. What else do you want to know?
So there you go. I like that. Tell all your friends and loved ones, optionsvoodoo, that you provide liquidity, and then you will pretty much end all those conversations for all time to come. So that might be a good way to do it. Just turn them off altogether. I provide liquidity.
Shut the conversation down.
I love it.
The CME used to have this great poster with basically a shot of the middle of the Eurodollar pit when it used to be this giant future trading pit. There was like 1,000 guys in there. And there's this picture of from the very top with one of those kind of eye-in-the-sky cameras where you had all these bodies in there trading, and just the caption at the bottom was just liquidity. It just gave you that good sense of what those guys are actually doing in there. So to the extent that helps.
That's the old saw that every market maker used to tell themselves when they looked around and they realized they really didn't produce a damn thing for a living. They said, "Oh, I make liquidity, so you feel better at night when your head hits the pillow." And it's also a good thing to tell your relatives, and you don't want them to ask about what you do. I make liquidity. All right. Then they'll think you sell pools, and it'll be a whole nother conversation entirely. All right. Thank you for that question, Options Voodoo. And that's going to do it for the old mailbag this week. And now we're going to dive right into Around the Block.
Around the Block.
All right, and that traffic noise means it's time for Around the Block, where we talk about, surprise, surprise, what's coming up on our own personal screens. And as we alluded to at the top of the show, it is earnings season again, so it's starting to be time to talk about relevant earnings, and not just Alcoa, Mr. Sebastian's favorite. Of course, we have the big G, Goog, on the 12th, and that's probably one of the more interesting and relevant ones to watch coming in. We also have Citi coming up on the 16th. Some interesting earnings coming out. What are you guys watching? Andrew or Mark? We'll start with you two.
You know what? I'm just going to be watching Apple. I think Apple's getting ready for a big run, and I think it's going to be a boring couple of days. That's what I think I'm watching.
Yeah, Apple's doing the pre-earnings run right now. Usually they wait till like a week or so before.
I think it's going to run into earnings, then probably sell off afterward.
I mean, usually they wait a little bit closer to earnings before they begin the monumental run-up, but they started it last week.
Yeah, I mean, that's what I was saying. The July contract was the most underpriced contract. I mean, think about this. They sold the July contract down to about a 22 vol again. Buy of the year. Yet again. So
that's fantastic. We had a conversation, I think, a week or two ago on the show whether, at the time, Microsoft and Apple Vol were trading about equivalent levels, and which was
buy Apple.
Yeah, which was the screaming. I think that was the no-brainer of the two. I mean, Microsoft's been the screaming Vol sale of the decade. Apple has been essentially the Vol buy of the decade. So it's kind of a no-brainer when they get to those comparable levels, which way you want to lean in that spread. Andrew, what are you watching aside from your succulent Maine lobsters?
I am I'm kind of like in a little time spread world. I think Mark and I, a lot of these times we're of a similar mind, and that's probably why we work well together. But just not a huge amount going on, kind of like little time spreads, little sort of strangle swaps, junk like that, where you have the volatility month supported by the earnings, and all the juice in front is just going to wither away and die like some, little raisiny pebble. So I think that type of trade probably works okay for right now. And it's kind of a couple of things that I have on and what we're looking at. So. And
Mr. G, aside from your size up corn futures position, what are you watching right now?
We got the minutes coming out the 11th. This week, they've been uneventful, but that 10-year note and those bonds yields the yields continue to go down. The prices are going up. It's just amazing. We've had people on the desk have been selling that for years now, just waiting for those yields to finally come in, and it's just not going to happen. So
it's been a long wait.
long wait, and it's good to see people give up. They're like, I'm done. I'm moving on to something else. But I mean, anything that stays up there for that long, I mean, it's anybody's game when it's going to guess when it's going to come back down. So see if those minutes can do it. Other than that, just see what the fallout is from that jobs report last Friday.
And, of course, on the individual name front, everyone who's listened to this show more than once knows I'm a big fan of course, the Iron Fly and, of course, the old rah-rah, the risk reversal. And like we talked about top of the show, Activision, one of my favorite names to trade in that one. Some interesting news coming out in Activision, a fun one to watch. For a lot of bullish risk reversals you can do for all sorts of credits or for, if Andrew prefers, a no outlay up front with risk reversals, because we know that's verboten for him to pay for a risk reversal. But Ford also starting to look very interesting at these levels for bullish risk reversals across the board. And I just wrote up something earlier today about EA, Electronic Arts, the other side of the fence from Activision, down a little bit today, but they've south of 12, trading at 13-year lows, and a lot of interesting stuff happening in that whole electronic gaming sector, and they are another great candidate.
Yeah, that sector is going to have to consolidate, just because there's a whole new competition that isn't a part of the video game industry. So
yeah, the mobile, I mean, obviously EA has expanded into that, and so has Activision, but still, model the model of the $60 retail shelf game is kind of going away.
Yeah, it's more than going away for sure, and so I think that you're gonna have to see some mergers.
That's of course why I love Zynga, but the market hates it right now.
Well, the problem is once some of these players decide to really step in, Zynga's going to be toast.
Yeah, or they buy some of the other players.
Or Zynga or they get bought. That'd be the other idea.
Yeah, after they waste all that money on Draw Something, which apparently no one is using anymore, they threw $250 million at an app, an iPad app, that app of the week kind of thing. So good old Zynga, I think, kind of reaping a little bit of what they sown. Problem with Zynga too, though, Andrew, is that they have that business model that is so in your face with upsells, and their quote unquote games are so very much almost borderline scams that they've generated a fair amount of ill will. And that, of course, can always come back to roost. So if any sort of competitors,
find out what their user count is. I'm waiting for a good option trade in Zynga. I had my last idea was correct, except just the direction was very wrong. It was a good proxy for Facebook, just in the toilet.
Facebook.
That whole sector's getting smacked around pretty good, though. I think people are starting. It almost feels like they don't believe the social networking phenomenon is going to happen. Like, you can feel like there's bloom off the rose for sure on a lot of the names. So I just wonder how crushed down they can get.
Yeah, obviously in this economy, anything that is sort of discretionary income based, like electronic entertainment and video games, going to be taking a bit of a hurting anyway. And these names have been the hurting has accelerated in recent months and weeks. Of course, the love hasn't translated to Zynga. The love has to go somewhere. I guess you have to just wait and see where the love goes, and then we shall follow accordingly, as we are wont to do. But that is going to do it for the old Around the Block segment. That's also going to do it for this episode of the Option Block. It started out kind of short, just me and Mr. Grigus. We've since have had a nice panel, including both of the Pit Boys on at once. We don't have that. It's a rare treat, listeners, to have both of the boys from the Pit on at once. And Andrew and Mark, before you go back to eating your succulent lobsters and whatever it is you do out there in, what is it, Winter Haven, Detroit? Or I don't know what you do out there.
Winter Haven. That's where I summer, is in Winter Haven.
I summer, yes. The old summer home. I'm not sure if you have delicious lobsters out there, but before you return from whence you came, what is coming up in the land of the Pit for the coming week?
We're going to have another free webinar a week from Wednesday. We're going to talk about adjusting butterflies. Should be a lot of fun. Go to optionpit.com/events to sign up. And make sure our July class is now full. It did fill up. We're now filling for our August Gold class. Come and check us out. And then, of course, we've got the event that we're doing with the Street and the CBOE on the 21st in Chicago. That is absolutely going to be worth checking out.
There you go, folks. If you want more of the Pit Boys, you can find them in a number of different venues and a number of different places. Or, of course, just surf on over to optionpit.com. You can find all that information and more right there.
And the whole class is where we teach everybody to do stuff.
Yes. You should just call it the Doing Stuff class.
Right. Mark teaches people to do stuff. I teach people to do stuff.
Maybe you should just change the branding to just, instead of Option Pit, just Doing Stuff.
We do stuff.
No, our brand is now Option Pit, the education company that assumes you're not an idiot.
Well, that's a very small market you're going after there, sir. I don't know.
Well, we're the only one that doesn't assume everybody else is an idiot, if you look around.
All right.
Mostly stupid is as stupid does.
And Mr. Grigus, what is coming up in the land of OX, sir?
We have the Baltimore Site Night, which is this Wednesday. So if you're listening to this on Tuesday, it's free site night with, I believe, Joe and Nina are going to be there. This is, thinking of Mark on this one, July 25th in Detroit. It's going to be at the Westin Southfield, Detroit. You remember that place, Mark? Guess not. And then in North Carolina on August 4th. There'll be another site night is there as well. All these are free. You can sign up on the website or just give us a ring.
All right. Thank you for that, John. And of course, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.